please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters, the show we're going to highlight all the buzzing stocks of the day. Well, it's a Friday. We started off on a positive note. We're still holding in the green, but really it's less than a convincing start to the day. Some of those mid-cap stocks are seeing selling pressure, and Asian markets as well. If you pull up the Japanese index, that was up 450 points. It's on the verge of moving into the red, so you should pull up some of those Asian markets, and maybe in fact the intraday chart of the Japanese index as well should come up for you. It's up around 100 points, but remember, in fact, in early morning, it was up nearly around 500 points or thereabout. Hey, Mangalam, interesting day coming up.
Interesting day coming up. You know, Nigel, I'll tell you what, the Nifty Bank, that one's underperforming. It moved yesterday. Post markets, we got the data. There was a lot of short covering, and it was also the Nifty Bank weekly options expiry. Now there is some weakness there. Let's see how this goes about. And the 200-day moving average, the last time we came this close to the 200-day moving average and recovered was about in January 2017. So after so long, if the markets come back to the 200-day moving average, let's see whether there would be another attempt or maybe there could be further short covering. So that is something we'll watch out for. A couple of things though really stand out from the option space. The 10,200 put has seen a bit of writing, so let's see how that pans out all through today's trading session. But at the higher end, the bears believe a higher level is what they can defend as well. So the 10,400 call is still seeing some bit of writing. What we'll do is we'll take this discussion forward, but first up, all the top headlines that we're tracking at this point in time. The tech stocks, they're gaining in trade today with the general sentiment upbeat. As reports suggest, Japan is looking to recruit nearly 2 lakh Indian IT professionals, while more positive news for Infosys, where the company has clarified its name is not there in the FIR filed by the CBI in relation to the income tax fraud inquiry.
And multiple news triggers for Sri Renuka Industries in today's trading session. The stocks in focus after the company's board of directors signed a binding restructuring agreement with the banks. Narendra Murukumbi has resigned as vice chairman and MD, while the company approves allotment of preferential shares to Wilma Sugar.
IFCI shares, they gain in trade today as the shareholders approve rupees 100 crore fund infusion plan by the government. Management tells CNBC TV18 that the company has non-core assets worth 6,000 crore rupees, which can be monetized when needed.
And it's a muted debut for HE Infra. The stock lists flat and immediately trades at around 3 to around 4% lower. In fact, now it's down close to around 2%. The management tells CNBC TV18 they expect to see over a 30% growth in revenue and over 60% growth in profitability in FY18.
L&T Finance gains after the company raises 1,785 crore rupees via a QIP issue. The stock is buoyant in trade today, also as the company's raised funds worth nearly 3,800 crore rupees in the last 2 days.
Well, keep an eye out on Tata Steel. That stock has seen a sharp correction really from the recent peak. Remember, they were winners in terms of the reports that we put out. We put out an exclusive as well that they're going to get both Bhushan Steel as well as Bhushan Power and Steel. The stock at that point of time was closer to 700 rupees. So it's corrected close to around 10% from that particular day. But in fact, from the peak of around 770 rupees, the stock has seen a very, very sharp correction. And just looking at the screen, it appears that there is some aggressive selling, particularly in the cash market. So keep an eye out on that stock. Manisha will join us later as well. She's telling us that commodity prices on the whole, they're getting a bit hit. So in the Chinese market, we have the Dalian iron ore prices that are down 5%. We have rebar prices that are under some pressure. You'll say, well, coking coal prices as well is going down, and that's an input cost for steel prices. But the entire commodity basket, that's seeing selling. And in fact, that explains why some of these companies are under pressure in trade today. The metal index itself is trading in the red as we speak. But how do you trade the Nifty? We're up close to around 45 points. Ashwani Gujral is with us. Ashwani, 45 points higher on the Nifty. Going to go into the into this weekend in the green, or do you think in fact we could see some selling from here?
See, my sense is second half of yesterday all through since morning, what you've seen is a very weak pullback rally. And often, the second day is more of a sideways day than a big trending day, because big trending days happen if you are in an uptrend. Given that metals are coming off and banks are anyway weak, I would think, this 10,300, 320 zone is a fairly stiff resistance, and maybe taking short positions here wouldn't be such a bad idea, because the market is up, but is not as strongly up as one would have liked after so many days of decline. So my sense is maybe second half you may give back some of the gains, close near unchanged, etc. So a pullback generally tends to behave more like a sideways situation. So this is a time to get short. There's particularly macro news on metals. That's where fresh shorts can be taken. So Tata Steel is a sell with a stop of 640, target of 615. Adani Enterprises is a sell with a stop of 166, target of 158. And L&T Finance, maybe you can buy with a stop of 165, target of 174. You see, there's no pressure on either side. Last many days, we had pressure on the downside. So here you have to be, more nimble and take smaller profits as the markets go through this choppy pullback.
All right, choppy pullback, Ashwani, but as we speak, the Nifty had briefly hit the 10,293 to 294 mark. A couple of stocks which were doing well. HDFC Bank, that one supporting the cause of the Bank Nifty, trying to fight for the Bank Nifty rather. That one's closer to the high point of the day. And Eicher Motors, that one should come up for you. That one too is at the high point of the day. Eicher Motors, Ashwani, has corrected about 10 to 15% away from its 52-week high. Do you think, longer-term investors are looking at names like HDFC Bank, Eicher Motors, as well as the ones which are available at 8 to 10% or even 15% discount from the record highs?
See, in general, this year, people will move towards safety, and generally safety is in large caps. So that way, Eicher is much more advanced in its, down cycle than many other stocks. So definitely, all of these large stocks will find buying. But we have to remember that all of March, there's a big player who wants out. So chances are all of these rallies will be fairly short-lived, because if somebody is getting better prices today than he got, say, 2 days back, I think there will be some selling. So you will not find, even on a pullback situation, a great amount of rallies. These 30-40 point moves are not going to scare the strong bears who have really tasted blood.
All right, Ashwani, but before we let you go, because it's Friday, it seems like perhaps you're going to watch a movie. PVR has moved to the high point of the day. Inox Leisure has been buzzing all through the morning. And Jubilant Food now suddenly is at the high point of the day. Any of those picks you like? I mean, not just the products, but as stocks?
See, when markets go down, you have to reduce the level of your taste. So pizza and movies is what you can afford. I guess, PVR has been also through a fairly long consolidation downtrend. I think even their downside is low, and if you buy from here, whenever the upcycle comes, you should get 1650, 1700. Jubilant has held on very well right along this correction. So my sense is whenever things turn, I think Jubilant can get up to 2350, 2400.
All right, Ashwani, thanks a lot for that. But let's get in some market opinion now as well. Earlier today, we spoke with Vikas Gatani, the founder and CEO of Progress India Opportunities Fund. Get his sense of the markets and these top sectoral bets. Listen in.
We expect further selling pressure till the end of month of March, because you can still sell stocks without attracting long-term capital gains tax till end of March. So that has been one negative. The interest rates in India, the cycle was while the global interest rates were rising over the last 1.5 years, led by the US, Indian interest rates were on their way down. Now, interest rates in India have definitely bottomed out, and with the rise in inflation and inflation expectations, we see that rates in India are also likely to rise, and that is not helping the markets as well. We totally believe in the demographics, in the energies of the young consumer, in the rising aspiration levels and the consequent discretionary spending which the consumer is doing and bound to do over the next 10 years or so. And that's where we focus on, and we do not see any slowdown in that discretionary spending. You can look at vehicle sales numbers, you can look at general consumerism trends. That story continues to remain quite strong. We also continue to like the non-banking financial services segment.
Some action seen in the F&O side of things as far as individual stocks are concerned. Piramal Enterprises at the high point of the day. We have a DHFL2 sitting with a gain of about 3%. And from the FMCG space, Dabur was buzzing all through earlier morning. And now we have Marico, which too has spiked to the high point of the day. So we'll keep an eye out on all these individual stocks. But the street is definitely watching out for the cement space. Onto a big CNBC TV18 exclusive now. Ultratech, they've raised their bid for Binani. Nisha Poddar is here with the exclusive details. Nisha, what have they raised the bid to?
So now, Mangalam, we gather from sources with direct knowledge that 700 crore rupees is the upside to the revised bid by Ultratech for buying out Binani Cement. And that makes the total bid size at around 7,300 odd crore rupees, which, remember, apart from paying back the lenders, it also includes the working capital as well as the capex. So this is the total size we are talking about compared to the 6,600 odd crore rupees, which they as well as Dalmia Bharat had both bid earlier. Now, here's the large contention that is coming in for this transaction. Ultratech has challenged the RP and the COC of Binani Cement for going ahead and declaring Dalmia Bharat's bid as the winning bid for Binani Cement. They have also questioned the grounds on which their bid has been cancelled and Dalmia Bharat is the winner. So that particular matter is in the NCLT in Kolkata, and Ultratech has really told the NCLT that they are revising the bid upwards so that the RP and the COC would be forced to now take into account their bid, and once again the race has begun for Binani Cement. Here I would like to point out the three stocks which are right now getting impacted. Ultratech is mildly in the green also because CLSA, even though it has called this particular bid aggressive, has still said that it adds value and is closer to the replacement value of the assets that Binani Cement has. So Ultratech there is mildly in the green at this point. It is definitely putting in a lot of pressure for Dalmia Bharat. So therefore that stock, as we expected, is in the red today. And Binani Industries, that needs to be watched out for closely. It is locked in an upper circuit of 5% because of this. And here is one big catch. Remember, Binani Industries promoter Bridge Binani has also moved the NCLT against the RP and has staked a claim of equity value for Binani Industries, which is the parent company, for getting something out of this bid. So if Ultratech raises the bid, that means this particular asset has some equity value, and Binani Industries shareholders may really gain from that. So it's a lot of complication, lots of really litigations happening there. These three stocks would be on our focus.
All right, Nisha, thanks a lot for that. You've listed three stocks, but a lot of complications. Nigel, suddenly a lot of interest in this asset, and now people are outbidding, trying to outbid each other, using various loopholes to go there. What does this do to all these stocks and any other stocks which are in the region as well, Rajasthan?
You know, Mangalam, first there are a few questions that come up. First, whether Ultratech's bid is going to be accepted or not. That's point number one. Second, if Ultratech's bid is accepted, then does Dalmia Cement get a chance to go ahead and, you know, rebid up their bid as well? They'll say, hey, you came in there, your bid got accepted. What about mine as well? So those are the questions, the broad-ended questions. What's the process now? Now, in fact, the resolution professional, what he's going to do is that he either has to accept or reject the bid. If he accepts the bid, then he takes that bid and he gives it to the committee of creditors. And then, in fact, they evaluate that bid. It should take another 4-5 days approximately. But, you know, those are the broad-ended questions that we are working with. What do you get if you get Binani Cement? Remember, Binani Cement is a 100% subsidiary of Binani Industries. Now, in terms of Binani Industries, today it's locked in upper circuit. But Mangalam, remember, just around maybe around a month and a half ago, if you pull up Binani Industries, the last month and a half chart, you'll see that the stock has corrected from around 150 to around 95 rupees. Why is that? Because you're not sure what is the equity value, whether or not the promoter is going to pass on anything to Binani Industries. So today it's an upper circuit. You pull up, the chart, you'll see from around 150 rupees, it's corrected. Maybe a last 3-month chart should come up for you as well. But what do you get with Binani Cement? Whoever is buying it, what do you get? Well, you'll get, a 6.25 million ton plant in India. That's an integrated unit. You'll get a grinding unit in the UAE, and you'll get a clinker unit in China. Besides that, you'll also get a power unit, and most important, you get limestone with that.
Right.
I was also speaking to a couple of professionals. They said limestone quality as well is good over there. But I'll tell you what, cement players, they'll take limestone wherever they get it, because people want to have limestone as part of the entire unit. Why do both these two majors want it? For UltraTech Cement, they continue their dominance. They continue gaining market share. So that's point number one. For Dalmia, why is it important? Well, all along, Dalmia has been part of Northeast as well as of South India. Now, they get an access into a good unit in the northwest of India. So that explains that. Besides the cement unit, what else you get? You get the glass fiber business. Those are 3 units in Europe as well as another unit in India. Now, CLSA has come up with a note. They are saying for all this, that is for the UAE unit, the grinding unit, the clinker unit in China, as well as this glass fiber business, altogether you should get around 1,000 crores. So that means that in fact the remaining value is around 6,200 crores for the 6.25 million ton plant.
Right.
What does it work out to in terms of an EV per ton basis? It works out to around $150 on a per ton basis. Now, that as well should come up for you, $150 on a per ton basis. CLSA says that in fact, yes, it appears that they are bidding very aggressively, but if you take into account that the 6.25 million tons, it can add another 5 million tons approximately, at an EV per ton of around $70 per ton, then it doesn't look very expensive, and then in fact, it will be nearly around $120 per ton, very, very roughly. So when you're talking about will it re-rate the sector, that could be the case. You're talking about a deal getting done of Binani Cement at around $120 or around $150 on a per ton basis. Take a look at Mangalam Cement. It's from the same vicinity from Rajasthan itself.
Right.
It can do some additional capex. So there, it's been a rank underperformer, for the kind of potential that they have. It's 4 million tons at $50. JK Lakshmi Cement, that as well, it's been growing. It's doubled its capacity in the last few years. 12 million tons at around $75 per ton. JK Cement as well, remember they have some white cement in there. Over there, in fact, it is around $105 per ton. And this Binani deal that we're talking about is around $150 on a per ton basis. So I'll be looking at this deal, yes, with all the unanswered questions. But it's clear that this deal is going to be done at around $130 per ton at least. So then, in fact, it could lead to a re-rating of all these cement companies, the Mangalam Cements, the JK Lakshmi Cement, as well as JK Cement Mangalam.
Fair point there, Nigel. When you speak about all these stocks,
Yes.
in fact, pull up Mangalam Cements itself. That one, perhaps the street was maybe listening to you and paying attention to the fact that perhaps there could be some sort of re-rating. There's a deal which is being done at 110 and this one trades at $50, and there we have it. That stock is at the high point of the day. Look at JK Cement and JK Lakshmi as well. Try to figure out if there is a move out there or not, but very important for the sector as well.
Yeah, exactly, Mangalam. And every time there was news of this Binani cement deal getting consummated, every time you look at that, a lot of these cement companies have been moving. So now I just was trying to look at it and say, why were they moving? Maybe in fact the street is looking at it in this context. We'll keep an eye out on this deal, but more importantly, we'll keep an eye out on the cement space, particularly from that region.
All right.
It's been doing so well, that steel in the last couple of years. Suddenly we are seeing selling pressure. All the ferrous names, Tata Steel, SAIL, JSW Steel, all of them have moved to the low point of the day. There's a lot of selling that we're seeing, particularly on Tata Steel, as I told you at the start of the show as well. Keep an eye out on the ferrous space. But moving on then, the country's largest lender, SBI, has raised the alarm on power sector loans. Says it is a stressed sector, not just for them, but for the entire banking space. We spoke to Mr. Rajneesh Kumar, the chairman of SBI. Let's listen in.
All the DISCOMs last year, they agreed to a program which is Uday. Under the Uday, it was decided that the working capital limits will be supported by the banks. The kind of improvement which was envisaged under Uday, I have a feeling that the improvement has not taken place to that extent what was anticipated. It is not SBI, it is SBI on behalf of all the lenders to these 3 power plants where the litigation is going on and went on. There is only one problem, and the problem is around long-term PPAs, where in the last 2 years there is hardly any long-term PPA. And what we have been submitting from lenders' perspective or from otherwise a sound advice also, that it is not the right strategy for DISCOMs to rely solely on the short-term PPAs. Long-term PPAs are in fact in their own interest.